You are listening to chartingwealth.com for Friday, the 7th of August, 2015. This is our training and trends. Going to start off as we have been doing of late with our training. We're looking at gold. Gold has been powering down since it crossed over going down when we told you that back on the 23rd of June. And it has gone from somewhere around a high of 114.30 all the way down to 104. Let's see where it ended today. Well, its low today was 103.78. Now that's $10. And remember, GLD is 10% of the real price of gold, so that's literally $100 off the value of gold. So what do we actually see going on with it right now? Well, we've watched it move down substantially from the 21st, large candle, 2-day candle going down, that is of July, the 23rd of July, and then powering down to the 27th of July. And then it's sort of just meandered sideways. Now, it is still in a down move, confirmed down. Looks like it might be converging a little bit as far as the MACD goes. The derivative oscillator is losing some of its speed. But let's take a look at the 4-hour chart and see what we see. It has been sliding sideways since, gosh, sometime around the 23rd of July. Slid sideways. It still has not gone below the low of the lows, which was the last call on that day of the 24th of July, was 103.43. And it has continued to move, well, sideways and then up a little, down a little since the 27th when it crossed over on the 4-hour chart. But what is it doing now? Well, the Bollinger Bands have given it some real room to move up. Two green candles throughout the course of today. Gold was technically up 0.44%. All the other indexes were down. Derivative oscillators gaining some speed. And we can see that there's a move up in the MACD. So what's gold actually doing? Well, it's confirmed down on the 2-day chart, but it is up on the 4-hour chart, and we'll continue to watch it to see if it actually confirms some up moves and if it's actually bottomed out. Whenever something stays along the bottom this long, it's typically going to move up. It's crossed over the down move after that significant movement. So again, looks like it would probably move up. As much as the market went down today on the other indexes, it is interesting that gold did not inversely pop up, but it's not. So we'll keep watching it. That's what our training is about today. Now we've talked about gold. Let's quickly go through the other indexes because there were some strong down movements today. What do we see? Well, we see a almost a doji here. It's a spinning tops actually what it is. We've got lots of movement up, lots of movement down, and then the market settled on the 2-day chart with a little bit of a down move in the middle of the wicks. And basically that is a spinning top. What does that mean? Well, it means a heck of a lot of volatility as far as the price goes, and nobody is in charge of it. If you had to look at it, you might say, well, the bears were a little bit more in charge than the bulls, but not by much. So what does that tell us? Well, the MACD crossed over going down, and again, we always talk about this. We've not been hitting it up a lot lately, but when you're in the summertime trading zone, there is typically in the summertime trading zone not a lot of volume in the market. Sell in May and go away, so a lot of the big money's pulled out. So there's a lot, the market's easier to sort of make go up and down as opposed to in the fall winter trading zone when it tends to move in one direction or the other, strong moves sustained over time. So we saw it on the 2-day chart pop up on the 29th. It's now of July. It's now popped over going down on the 6th of August. So just in about 7 days or so, 8 days or so, you've seen some significant move down. Now, when I say significant move down, not really. If you're looking at the chart, it actually ended today higher than it was, let's see, back on the 31st. So not a lot of movement down, but technically it was down 0.67%. Now let's get a little bit better feel for what's actually going on. And if we look at what happened on the 4-hour chart. Well, we can see on the 4-hour chart substantial down movement, crossed over going down, and again at the same time the big chart crossed over. When you see them both cross at the same time, that can many times, and again in a market that's moving smoothly, be a good sign that you've got some movement you can count on. But again, in the summertime trading zone, it's a reason a lot of people don't trade. So that's where we are in IYY. Range back out, we're going to see a similar pattern with the S&P 500. Again, remember it represents 500 big stocks, so it moves a lot of times similar to what you see in the total market, which is IYY. Not quite a spinning top as far as the last 2-day candle goes, but a crossover going down on the MACD, and also this is important when you see the MACD and the derivative oscillator crossover at the same time, typically a sign that the market is in a down move. Could you trade on that alone? Yes, you could. Would it be not as good as confirming other things? Yes, unless you've set up your own experiment and you've discovered that the way you've set the parameters up on your chart in this kind of market, that's working for you and you can count on it, but we don't have that. Now let's look at the 4-hour chart, see what it shows us. Again, strong down moves, crossover going down at the beginning of the day, and that is where we are on our SPY and both in our 4-hour and our 2-day chart, the half-day and the 2-day chart. So lastly, look at my favorite, the Qs. What has the Qs done? Well, it's been moving sideways. Technically, the Qs was down 1.60%. Again, a spinning top, lots of movement up, lots of movement down. The bears and the bulls counteracted each other. The bears won a little bit more, but again, the movement is not hardly any lower than it was back on the 31st, and definitely not lower than it was back on the 29th of July. So let's look at the 2-day chart, the 4-hour chart, to get a little bit better view of what's happening. Strong push down after it had crossed going up and now has crossed over strongly going down. Derivative oscillator has dropped over. So we have a strong down move on the Qs. Will it bounce back up and be resilient? We'll have to see once those candles close out. So that's where we are as far as trading goes. As we wrap up the day on the 6th and move into the markets on the 7th of August, we wish you the best in your investing. We love you to follow us on Facebook, Twitter, and Instagram. We love to hear from you. Please feel free to post about our comments and get our newsletter at chartingwealth.com.